Hey folks, Dan Frio here with your opening bell, I guess I'll say, for February 27th, 2025. So we called it yesterday. I said, here's what the analogy was last night. We have earnings reports came out last night from NVIDIA, and then we have some economic news that was coming out today. And I'm like, well, if NVIDIA's earnings are good from last night's close, and then this morning in regards to GDP and unemployment and things like that come in a little more favorable, we're going to see rates go up. So let's see what my predictions were from yesterday, how they came true. So let's go over through here. Here's what mortgage rates did yesterday. They keep easing down just a little bit, tick by tick by tick. Is that going to continue? I don't think it's going to continue today. We had a big rally in the market, and I think there's a lot of data coming in over the next 24 hours as well that we're going to be really concerned about. So let's get over to the news and see how all this stuff is affecting these things right through here. So here's what you're seeing right on the board. Now, I haven't said this in a long time, and a lot of people don't understand what these rates are. They're like, Dan, what rate can I get? Well, let me explain to you what these rates are first. These rates are not my rates. These aren't any individual bank's rates. What happens here is Mortgage News Daily, they survey lenders all over the country, and they ask them 5 questions. These 5 questions are important, okay? You might say, yeah, I qualify for 3 of those, but the other 2 are very important. So let's go through the 5 pieces of the puzzle that equate out to these mortgage rates. So this person over through here, they're buying their first house, so it's going to be the first-time home buyer. It's a single-family home, okay, and they're going to live there. It's going to be their primary home. You're probably like, okay, Dan, that's right on topic right here. When you go down through here and you really learn, what those rates consist of, these people are putting down, they have a 75% loan to value. You can see it right there on the screen. So what does that mean to you? Well, they're putting down 25%. Are you putting down 3, 4, 5%, maybe 10%? These people are putting down 25%, okay, and their credit score is 780 or above. So if that's you, well, that's basically where your rate's going to be right through there. Sorry, I blew it up so much. So that's basically what we're looking at on rates. So let's get over to see. First thing we had out last night was NVIDIA. NVIDIA blew away earnings, and I'm like, this isn't going to be good for tomorrow's market. So we locked everybody. We have up until midnight last night to lock everybody. Let's see if that panned out well for us. So let's get over to the weekly jobless claims. They came in a little bit higher than expected, which that's not good news. We'll go to core durable goods. They came in a little bit better than expected. So is this kind of the yin and yang where everything balance out? Well, let's go over to the economic calendar and just break down the biggest events that we have for today. So we're going to go through here. And on Thursday, we have durable goods blew away the numbers. The last reading was a negative almost 2. Now it's a positive 3. So I'll say that's the only good news we have out for today. Okay, so we can go down through here. GDP, I'll say, well, that went from 3.1 to 2.3. So GDP starting to come down. The expectations were 2.3, so that was right on point. And then initial jobless claims came in a little bit on the hot side. Last when they thought it'd go to basically stay steady at 222, it went up to 242. So that was 20,000 more people getting unemployment claims. Now, could this be a lot of the layoffs, the job cuts, everything else? That's what we're going to try to follow through with. But tomorrow, we have one of the biggest numbers that we have coming out in this quarter. It's the PCE. This is the number 1 inflation number that the Federal Reserve monitors. So we're going to see how it comes in tomorrow. This is a coin flip, folks. So again, this one is going to be than expected. You're going to see rates spike, and you're going to see the market sell off. Okay, so let me just rewind a little bit and go back to yesterday. So, and here's why a lot of people choose us. Let's go over to the bond market first and look at the reaction we have so far today. So here's what we were looking at. Here's what's going on with the MBSs. This is the mortgage-backed security market. It is all over the fence this morning. It's down 10 ticks. What do we know about this? But at this channel, we follow the MBSs because this is the mortgage bond that's yielding this thing is the biggest component of your mortgage rate. Okay, what you have to understand is the number right up there above. If that number is going up, like we saw over the last 5 or 6 days, that's good news for rates. As this goes up, rates are coming down. Now, as this is coming down right through here that we see today, that means rates are going back up. We locked everybody in last night because I figured this morning's news wasn't going to be good news for mortgages. Plus, look at this rally. Think if this was a stock and you're like, okay, I'm watching it here, and I'm like, okay, that thing has way peaked out. I'm going to take a little profits off the table. I think that's what people are doing at this point. Plus, with the NVIDIA earnings that's coming up and saying, well, the AI trade is still in play on Wall Street, so money's going to flow back into that. So there's a finite amount of money out there where investors choose to put that money. That's what we're trying to track. So here's one of the reasons why a lot of people choose me. Let's just say you were working with a lender, put in your application, time to lock, because as soon as we approve you, we're going to lock you. And they locked you down here. Okay, you missed out this whole rally through this. That's what we do for people. So if you're looking to partner with us, just get involved, because my name is Dan Frio, where our slogan here is one application, one credit pool. We're going to shop your loan over 30 different lenders, but we have a lot of knowledge in this business. So a lot of people are just jumping in there saying, okay, yeah. Well, that's what they did, and they missed out this rally. So how do you do it? What do you do now? I'm going to give you a little bit of tricks at the end of this video so maybe I can help you out at this point, even if you're locked in. So let's get over to what the Federal Reserve is looking at, and here's some of the data that just came in. Okay, so here's what we're looking at, the economy at a glance. So this is basically what the Federal Reserve, this is the main three things they look at. They control the federal funds rate, which is in a week or two, and they're going to come in and tell us what exactly they're going to do. Okay, so they're going to look at these three pieces of the information. Inflation, well, the PCE, well, that number is coming in tomorrow. We're going to see that right through here. So I'm on the fence of this one. If this thing, like I said, if it comes in a little heavy, you're going to see rates jump. But if it comes in line or below expectations, that's going to be good for the market. So I'm always in a cautious position. I lock into these when numbers coming out in the next couple of days. So that's what we're looking at right through there. So that's what the Federal Reserve looks at. More data that they look at. Unemployment rate. Okay, so we just saw today the unemployment numbers went up a little bit. And then the GDP, gross domestic production, that just came in. That came in as well. So it's at 2.3. So this is what they're looking at. So they're saying 2.3 in the GDP, not bad. A 4 handle on the unemployment rate, that's historically good. And a 2.6 on the PCE, that's what we're really, data is really important when it comes to the inflation numbers. So let's get over to see what the CME FedWatch tool is going to tell us. This is basically a prediction of what the Federal Reserve is going to do at the next, basically meetings throughout the next year. In 20 days, they're meeting, less than 3 weeks. And it's coming down saying, let's go to the probability chart. This is easier to read. There's now a 97% chance they're not going to do anything right through here. Here's the federal funds rate. Like I said, right through, you could see that validated right through here, 4.25 to 4.5. You go over through here, 4.25 to 4.5 is where we are. A chance they're going to stay there. Okay, so the Fed's not going to do anything. But tomorrow's numbers could be a game changer. So that's what's happening in the market right now, folks. Rates are going to go up a little bit. Let's get over to see what the markets are doing. So let's just recap it again. Mortgage rates went down a little bit yesterday, but they're going to go back up today a little bit. Not much. It's about a negative 11 handle on the MBS. So we might see 6.8 again today. See how that's doing. Let's refresh this real quick because these are changing by the second. Dow Jones basically flat. NASDAQ's up 180. I thought this was pick up a little bit more based on NVIDIA earnings. Oil's still below $70 a barrel. We like it, even though it's up $1 a barrel. Then let's get over to the 10-year Treasury. It's ticking up just a little bit. Remember I said on this one yesterday, I'm expecting a 4.3 handle on this, and that's why I expected rates to rise a little bit today. So now, my name is Dan Frio. I hope to be your nationwide mortgage loan officer. From all this data I told you, I hope you understand that I really understand the market. So if your only goal is to get the best rate in town, good luck to you. And here's why I say that. No disrespect. We're out there to help people. So if you know what you're doing and your only concern is, I just want the best rate in the whole market, we'd love to work with you. But the problem a lot of people do is they'll work with us and then they'll go and keep shopping. But if that's what you're looking for, please go ahead and do so. We want to partner with those that really need our help. There's only a couple people on my staff, so we really need to focus in on those that truly need our help. They've stopped shopping around. They're like, Dan, I understand what you do, how you do things, and I want to partner with you. So if that's you, first thing I need you to do is go to optoutprescreener.com. Okay, this is a public service. What happens is when I pull your credit, the credit agencies are now selling your financial data. I don't want that. You shouldn't want that. Did you sign up for the do not call list? Well, you better sign up for this thing. So what this will do is it'll stop those are called trigger leads. So it'll stop that data from being sold. So please do this before you do anything. Now on to me. What do I do and how do I do it? Well, my name is Dan Frio. Like I said, our slogan here is one application, one credit pool. We're going to shop your loan over 30 different lenders. Now, how do we do that? Well, I work at a federal bank, licensed all over the country, so I can help no matter where you are in any 50 states as well as Puerto Rico. The cool thing here is the bonus on top. We're also set up with 30 other lenders. Okay, so what this means, your application with us, there's going to be one application, one credit pool. Now I have all the products at my bank, plus I have all the products, rates, perks, and everything else of 30 other banks, and we have 30 right on the button right now. Okay, so what does that mean? If you're looking for a down payment assistance program, one of these banks might have it. I might have something for you. Is there any perks out there like free credit reports or free appraisals, things like that? These are things where I can help you with. Plus what we do is we monitor with over 30 different lenders who has the best program for us. That's number one. A lot of people call me and they're like, Dan, I'd like to buy my first house. I think it might be challenging, but what's the rate? It's like, well, if you can't buy a house, maybe the rate's irrelevant. So let's maybe try to get you approved first, or at least give you an idea what the payments would be. And if that's affordable, we'll keep moving on. So don't just be wowed over that rate. There's a lot more to the equation. So if you want to reach out to me and partner up with us, just go to therateupdate.com. Here's our website. I'm going to be changing this and updating a lot of things in the next week. So you're going to see a lot of changes on our end, but you could hit the apply now button if you want to put in your application. That'll come right to me. Within 24 hours, I'm going to get you on the phone, answer any questions that you have, and we're going to get your one-on-one consultation. Please, I'd love doing these because I can talk with you. You can talk with me. We can Zoom if you want. However you want to do it, you just get a comfort level. If you're a homeowner right now, we just created a tool, and I don't like where this is, and I'm working on placing it a little bit different. It's a rate watch tool. So if you're a homeowner now, this will allow you to put in the rate that you want to refinance at. And as soon as that rate hits it, I'm going to get you on the phone, and you better answer. So that's what's happening there. We can talk about the numbers and the costs and everything else. But if you scroll all the way down to the bottom, here's the best way to get us. Or reach out to me personally. The phone systems, for some reason, they keep getting ported out to another company. I don't know if people are messing with us or not. It's supposed to be fixed today, finally. So if you're having a tough time getting a hold of us through there, please just email me directly. This is me. Give me your phone number, your question, anything you have. I will get you back on the phone to answer that question and anything else you have. If you just have some comments, you can go ahead and leave those down below. But that is our report for today. So mortgage rates, they're going to pop a little bit today. MBSs are down 11. See a 6.8 handle on the 30-year fix by the end of the day. So check out my later closing video. See how all this mess ends for the day. So thanks for watching, folks. If you, like I said, if you're having a hard time getting it through our phone numbers because I don't know what's going on, please feel free to just email me and I'll call you right away. Thanks for watching. Can't wait to see you back here at the closing bell. If you haven't subscribed yet, please do so right over there. Love to have you as a subscriber. Take care. God bless. Have a fantastic day.